Looking at an emergence of talks around the expansion of the mandate of the Reserve Bank, and it is said to form part of deliberations at the governing party's 6th National Policy Conference. The ANC's head of economic transformation, Mmamoloko Kubayi, having been quoted saying the aim of this discussion is with the view of seeking opportunity to help deal with chronic unemployment and boost the inclusion of black people in the financial sector. The matter has been a long-standing debate with objections raised, described as interfering with the SARB's independence. This is a matter Business Unity South Africa CEO Busima Vuso warned against recently. Take a listen.
If the Reserve Bank doesn't do what it's doing at the moment, then we are actually going to face a much more bigger problem. Remember, the bank's primary mandate is to protect the value of the currency in the interest of balanced and sustainable economic growth. And it also has a statutory mandate to enhance and protect financial stability. So whether we like it or not, whether we acknowledge it or not, whether we realize it or not, the intervention by the Reserve Bank is a very necessary one. And I think credit rating agencies have said over and over again that the South African Reserve Bank's inflation targeting regime and creditability are an important credit strength and institutional strength for the country. So the integrity, therefore, and the independence of the Reserve Bank and the interventions that it's putting in place should not be questioned.
We stay with matters related to economic policy around the governing party's policy conference, and we are joined now virtually by former Statistician General Pali Lehohla. Thank you so much for your time, Pali. Let's first talk about whether you agree with this conversation that is long-standing where policy is concerned, and it directly speaks to an expansion of sorts to the mandate of the Reserve Bank.
Thank you very much, and thank you very much to listeners. I think one has to look at the architecture of the economics of finance, employment, and economic growth as an integrated system. And when you want to impact one without considering impacting the others, then you obviously have a partial view of economics, which is central to governance of countries. So if you only look at protecting the strength of the currency without actually looking at the impact of that on employment and economic growth, then you misrepresent the fundamentals of economics, particularly the Phillips curve, which basically looks at inflation and unemployment. So you cannot look at one without looking at the other. Then it brings serious imbalance in the system, and you will be surprised that the one succeeds in terms of inflation targeting and the other fails in terms of unemployment. So this myopic view that the bank should protect currency and by some automatic process, jobs will be created, economic growth will emerge. It's not true, because over the last 24 years of inflation targeting, we see that the real interest rates have been higher than economic growth. So it's a very silly approach to economics, not to look at the comprehensive architecture of economics and the laws of economic motion. If you look at one and not look at the others, then it's a very, it's a stupid way of looking at things, and the consequences of that are very dire. So indeed, the mandate of the Reserve Bank has to be reviewed. If not, the mandate of other sectors of the economy in policy terms have to be reviewed to countervail them with that of the Reserve Bank on protection of currency. At the moment, such powers are not there. So basically, there is serious asymmetry between looking at protection of currency and other objectives that are even more important, which is unemployment and economic growth. And the results are very obvious for the last 24 years. 18 of the years, real interest rates have been higher than economic growth. which means we have succeeded in financializing the economy. And the evidence is there that manufacturing dropped from 24% to 13%. So the cost of borrowing has become high for investments. And the only thing that the markets will do is to invest in financials. And therefore, it's not surprising that the financial component of the GDP is about 24%, and manufacturing is 11%. So these are the consequences of policies that are biased towards protecting currency.
A realistic picture there with Lehohla, but let me bring in Economist at Econometrix, Dr. Azar Jammine, for this discussion. Thank you for your time, Azar, and I would like us to also discuss the reality, essentially, of the lived experience of a South African. When we speak of economic policy, half the time in South Africa, we are not necessarily talking about the unemployed South African or the economically inactive South African. So what type of policy needs to be devised by the governing party to basically balance the scale here?
Well, the one aspect that received very little attention that is absolutely critical and probably the biggest underlying cause of the high level of unemployment and inequality that we have, and the reason why we're not seeing manufacturing and investment in productive assets taking place, is the very poor level of educational outcomes in the country. The majority of students who go to school receive a very poor education, leave school, and are ill-equipped to join the mainstream economy because they cannot really add value to that economy. And education really needs to go down to the basic early childhood development level. And much of the problem that we have in education is not only the lack of decent school facilities, but also the lack of decent teachers, and above all, a really weak home life environment for the majority of students when pupils when they start growing up. No more than, according to Statistics South Africa, no more than 31% of young people in South Africa who enter school do so with both parents at home. Now, that's a very poor starting point and leads eventually to a situation where the majority of people are just insufficiently qualified to hold a decent job that can earn them an income that will get them somewhere. And the counterpart of that is that the small, say 15% of students who get a decent education, who go to private schools or to Model C schools and have decent teachers, are in a position to take up the lion's share of the jobs that really yield decent incomes, and you end up with a high level of inequality as a consequence. That completely bypassed the policy context.
Yeah, a very important point that you raised there, Dr. Azar Jammine, and I'd like to bring back Dr. Pali Lehohla into this conversation on that note, because for the past 2 decades in South Africa, we have seen that there really isn't enough that is being achieved with the allocations to even basic education, and of late we have seen, unrest around the funding of higher education. That also speaks to economic exclusion and a barrier to entry, essentially, as Dr. Azar Jammine has just explained. Then, Dr. Lehohla, where should policy in that regard be before we even get to the likes of a basic income grant?
The one thing that we have not followed, and it has spawned a lot of negative consequences, is the politics. If you look at the question of spatial apartheid, we haven't addressed that. What has happened then is we see a lot of urban sprawl instead of densification, and the central business district is occupied by foreigners. And there we have a very toxic situation. And this particular thing is influenced by our politics, because people want constituencies, and therefore they will allow urban sprawl. In ways, so these relationships are very important. Coming back to the question of education, and it's central to this urban sprawl, and not fixing spatial apartheid, because the absence of parents is a function of apartheid economics, which we haven't changed at all, where people are migrants, single parents, 60% of parents, of fathers say they are married against 30% of mothers. So you can see the schizophrenic environment in which children are brought up, which is the point that Dr. Azar Jammine is making. And yes, South Africa has enough money to pay for education. 22% of our budget is allocated to education, which is a good chunk. But how it is poured in a very porous vessel. So you see a few managing to go to getting a decent pass. I mean, we have 1.2 million children born in South Africa every year. 900,000 of them get wasted every year, or if a million of them get wasted every year, because only 200,000 get a decent pass during matric. And even this 200,000, we can't even sponsor them well at higher education.
Yeah.
Hence, the fees must fall. And now we are looking for social compacts. Instead of looking for social compacts, when students actually said fees must fall, that was the most critical compact, where students were united in their compact, defining what the future of South Africa should be. Instead, the stupid government came and nitpicked and divided the students. And the Afrikaners now have built their own university. You can't have social compact in that kind of environment where individual tribe instincts says they should do other things. But that is inspired by our incoherent and inconsistent policies that do not have depth of understanding of what we are trying to solve.
Dr. Azar Jammine, lastly, let's talk about that basic income grant. There's been lots of debate about how it is likely to be funded in South Africa, as much as it is reactionary to the current social economics in South Africa. That proposal of a possible hike in VAT to 17% is unlikely to sit well with the general public. What's your view there?
I think it won't sit very well with the general public. And as a consequence, I think what we are recognizing more and more every day is that a basic income grant, as envisaged by government, that can actually keep people from, not starving, is really completely unaffordable in the context of. But again, we are tackling the symptom with a basic income grant, not the very cause. And the cause, as I mentioned, is higher education, better education. And the problem is that if we do then decide to start borrowing, let government just borrow more to fund a basic income grant, you'll end up paying more and more interest on debt servicing, and eventually the government will be obliged to print the money to actually provide the basic income grant. That will lead to higher inflation, a sharp decline in the exchange rate, and that in itself will lead to even more impoverishment than we have at present. And a basic income grant also has the perverse effect of reducing the incentive on the part of people to try and uplift themselves and work in order to stay alive, which is the case. We see that in a lot of Africa, where people know that they will starve if they don't get on and try and find a job and do something to be gainfully employed. And with a basic income grant hides that. On the flip side, of course, it's one of the fact that we do have a very large variety of social grants is in fact helping to avoid a massive social upheaval in the country. So it's a very tricky situation. But really, to try and spend 300 to 500 billion rand on just dishing out money to everyone in the country is not the way to go from a longer term point of view, and is totally unaffordable in the context of the current fiscus. And attention should be paid instead to try and address the problems that cause poverty and inequality. And I've mentioned decent education as the biggest one. And the policy conference has just not addressed that issue at all.
Thank you so much for your insights, Dr. Azar Jammine and Pali Lehohla. They're talking to us about the expected outcomes from the ANC's National Policy Conference.